Good evening, guys. It's Saturday, December 2nd. My name is Dave Coker, and this is Talking About Finance. And oh my gosh, what a totally cold, totally dark night it is tonight. It's clear, it's dry, it's sub-zero. Just the way we all like it, right, guys? You know, it's times like this we talk about finance. We talk about techniques to help you achieve financial independence. We also just talk about making money pretty much any way possible, but mostly in the markets. The S&P 500 finished up about 25 basis points on the week, or 0.25%. 9 of 11 sectors were in the green, with real estate alone up some 2.9% on the week. 2 sectors disappointed. Energy came in flat, and communication services on the extreme right-hand side of the chart there dropped over 2%, 2.01%. Mostly, I suspect, because of Alphabet's sharp fall. So November was a good month in the markets. It's what I'm calling, if you read my articles on Medium, an everything rally. Everything rose in November. The question is, will this roll into December? Well, we got to see what Mr. Tax Loss Harvesting has to say about that. Not really sure. And overall, I'm still very cautious about the market. I've been building up cash, just waiting, and we'll see what happens over the time. The VIX traded up on the week to 12.63. It started the week at 12.46. The 10-year note closed the week at 4.21%, up some 0.3% on the week, and up 0.3% year to date. Oil closed the week at 74.24, up 1.7% on the week, or pardon me, down 1.7% on the week, and down about 7.5% year to date. And because yesterday was Friday, of course I bought Bitcoin. A very general rise over the past week. And tell you what, forget about that ETF. Let's just keep buying, and never selling. It's exactly what I've been doing for many years, and I'm really indifferent about the ETF. If it comes, it comes. If it doesn't, I'm not going to lose any sleep over it. I'm just going to keep buying Bitcoin. So let's find out what me and my buddies, some 50 or so finance professionals from all around the planet, talked about last week. And if you don't know us, let me introduce us. We are Global Wall Street. And between Telegram and our personal networks on LinkedIn and WhatsApp, we know everyone, almost absolutely everybody in global finance. And this week we're reporting from Amsterdam, we're reporting from Beijing, we're reporting from Wall Street, we're reporting from San Francisco, and we're also in Salt Lake City. We have people everywhere, absolutely anywhere and everywhere that matters. So let's go. 7 slides for 7 days. And you know something? I'm getting warmer just talking to you guys. You're the best. Now, we always talk about buy and hold. That's my strategy. I've got some shares that I've owned, stocks I've owned over 20 years, 23 years, I think, overall. But some people in the group are a little suspect about that. They like to move in and out rapidly. I don't like it. I buy and I hold just for dividends. I don't really care much about the share, as long as I can cover the dividend or the share price, as long as I get a reasonably good yield when I buy. But it's really fascinating that some people try to move in and some people try to move out. In other words, they're trying to trade. And I think we know that that's a strategy that's going to give you a lot of issues over time. And especially when we see things like this going on, when we see the market dropping significantly. Guys, whenever that happens, I buy. I pile a bunch of cash in. And right now I'm holding back. I'm very nervous about this rally and these higher share prices, although it's deceptive. Because no major index, if you look at the S&P 500, the NASDAQ, or the Russell 2000, they're still trading below all-time highs they hit 2 years ago. Something to think about. People are getting excited and blindsided by November's rally. But yeah, if the market drops significantly, I definitely pile in the cash, without a doubt. And we're going to see valuations readjust. It's my sense. Things are just too bizarre right now, in all honesty. And yeah, some people don't like the idea that I equate trading with gambling. Well, it is. Really, what's your probability of finishing in the green when you trade? And don't say I never lose money, or really, really good, quantify it. And when you quantify it, I want you to go back and look at a spreadsheet that tracks your gains and losses. Oh, you're not maintaining a spreadsheet. Now it makes sense why you think you make money all the time. That's a well-known mental, a cognitive deficiency, a bias. So you do need to pay attention to what you're doing. And if you track it, you'll notice you lose money more often than you make money when you try to trade. And this is one reason why we're a little suspect. Now, this came off a long-form research note I wrote 2 weeks ago, and you can find parts of it up on Medium. And in that note, I'm talking about the regime changes that we're seeing. And this is a big regime change. A lot of people haven't picked up on this yet. Of course, the volatility index tracks the 30-day forward expected volatility in the stock market. You can see from 2003 to 2020, we averaged 19.1 and dropped as low as 9. From 2000 to 2023, we averaged 23.1 and dropped as low as 12. Now, the max for both of them were roughly the same, 80.6 and 82.6. There's nothing suspect going on with the second sample. What's going on is that stocks are more volatile. They absolutely are. And I got a mixed mind about why. I tend to think what happened was when they did the stimulus and the pandemic relief and punched a bunch of money into the economy, it got on the hands of retail people who, I'll trade. And we know a bunch of people tried to trade and probably didn't do super well. But yeah, that's why we're seeing this happen right now. We're seeing higher, that's part of my theory, why we're seeing higher volatility. There's a lot of people out there with stupid money, and they're trying to trade. And of course, we all know, even professionals will tell you, trading's a very tough game. And I refuse to believe some retail guy sitting at home with his free data and his home computer can consistently trade and make money. I don't care what tools you use, it's garbage. Don't try to convince me. You can't trade and make money. Not like I make money. Because guys, I get paid every day. I make money every day. I get paid dividends. Now, I don't realize that I don't get paid the dividends every day. They pay monthly, but you can calculate the daily income across the revenue stream. And yeah, I get paid every day. When you trade, good luck with that. And people still are confused about bonds. And this is a really interesting one because I'm not sure who did this or who put it in the channel, but we were talking about it, and it's a misconception. Guys, bonds almost always yield more than inflation. If they have what we call a negative real interest rate, who in God's name is going to hold them? Nobody. So bonds almost always will offer a positive real interest rate. In other words, a rate of return above and beyond that of inflation. Something to think about when people badmouth bonds. Most people, I think, are pretty ignorant of the math underlying fixed income instruments. And that's why they think, oh yeah, it only yields 4.5%. I'm not going to buy it. That's too low. They don't know what they're talking about. They really, really don't. And this is a really good one. Michael Saylor, from MicroStrategy. Yeah, this quote's fantastic. Let's decompose it. Inflation's worse than you think. I've written a lot, and you can find my articles on the internet about CPI. One that I wrote that got a lot of good feedback was CPI is a lie. CPI is a very complex metric composed of roughly 80,000 different items. If you use all 80,000 items, yes, CPI works for you. Doesn't work for me and my wife and our family, does not at all. Our rate of inflation is closer to 15% than it is to the official number. It's like 14.7 actually. Oh, and Bitcoin is better than you know. Yeah, I've been into Bitcoin a long time and I'm still learning. You really gotta learn stuff about Bitcoin and how it's going to change things. Unless Wall Street kills it, which they really, really want to do, but we'll see exactly what happens there. And finally, once again from Plan B, guy's fantastic. His research is spot on. And what we've got here is we've got the chart going all the way back to 2010 or 2011, my apologies. And what we're doing is he's tracking the Bitcoin price, and then he's got his different forecasts. Realized cost price, 2-year realized, and 5-month realized. And right on plan, as he said when he posted this on Twitter, coming right in on plan. The 5-month forecast is the most accurate. So pay attention to his work, and you can find, if you go look at his stuff on Twitter, you can find what he's forecasting for 2024 as we approach and go past the halving. And yeah, if things work out according to his forecasts, which almost for certainly, well, I shouldn't say it quite like that. I really hope they will, and I tend to think they will. Yeah, we're going to see some good stuff with the price of Bitcoin. All right, guys, that's it for this evening. Have a great night. Hopefully you're someplace warm. And if you're in a warm country, then I hope you got the AC on. No place is perfect, huh? Have a wonderful evening. You're going to have a fantastic week coming up. You're going to make buckets of money. Just remember, focus on dividend-paying stocks. Don't buy any crappy non-dividend-paying stocks that everybody's heard of. Nobody's heard of the companies I own. Nobody. Well, I shouldn't say it quite like that. It's very rare for somebody to have heard of a company I own because they're obscure. They're dividend-paying companies. Everyone wants to pay attention to Google, Meta, all these crappy companies. Even Apple I'll throw in there, but I'm a member of the McTribe. Yeah, so you really, really want to own dividend-paying stocks. That's it, guys. Thanks very much. Take care.